Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
If you want to figure out how to go from your first flip to becoming the biggest nationwide provider of turnkey properties, this is the show for you. My guest is Marco Santarelli of Norada Real Estate and Norada Capital. We're going to go through our old school journeys all the way up until now. You're going to learn about turnkey and other investment opportunities and a lot of real estate investor mindset. Let's go. This is episode 142 of Zen and the Art of Real Estate Investing with my guest, Marco Santarelli. Marco is an entrepreneur, investor, author, speaker, podcaster, educator, and the founder and CEO of Norada Capital Management and Norada Real Estate Investments, the largest nationwide provider of turnkey investment property. Marco, welcome to the show.
Jonathan, it's an honor to be on your show. How are you?
I'm doing well. Thanks so much. And yeah, it's great to have you on the show so we can talk a little old school investing because I know you did your first flip at 18 years old, right?
That's correct. I jokingly say I had to wait until I was 18 to buy my first rental property, knowing that I wanted to get my first rental at the age of 16.
Yeah.
But I couldn't qualify for financing, so I had to wait till I was legally an adult.
Yeah. So, well, where did that come from? What was it about real estate that so interested you at a younger age, younger than some of our listeners? Me, I was walking houses at 5 years old because my dad was making me do it. But what about you?
Yeah, it's a good question and kind of an interesting short story. I don't know how old I was. I probably was between the ages of 9 and 13. And I was looking around with my parents, typically my mother, looking around at how people dress and what they had and whatnot. My mother made a comment to me one day at an Italian wedding or something like that. She said, "You see that guy over there? His name is Albert Piatelli. He goes, he owns a whole bunch of duplexes on Center Street." And, the guy, you never would have guessed it. Like he was just dressed below average, was non-assuming, just a bit of a joker. And I thought, interesting. You really can't judge a book by its cover, but I realized that the guy owned a bunch of property. I think they were free and clear or close to. He made a great monthly income and you never would have guessed it. But I thought, damn, that provides like some pretty good financial independence and ultimately some time freedom. And I didn't know it at the time that I wanted time freedom. That's ultimately what I wanted, just to be free to do what I want when I wanted. But I thought I wanted to be rich, And today, my definition of rich and wealthy are two different things. But I looked at it and I thought, man, this is really the direction I want to go. I don't want to be working. I don't want to be working, period, but let alone working for someone else. So I just took it upon myself as a teenager to study entrepreneurship, business, and real estate. And even though I couldn't drive, I begged my parents to buy me, courses and books and drive me around wherever I needed to go. And I just studied it on my own. Long story short, I just realized that, this is my calling. I want to be an entrepreneur and I want to be an investor. And this was long before Rich Dad, Poor Dad, long before, we studied, the whole BI, BS, EI quadrants.
Yeah.
But I wanted to be on the right side of the quadrants. I wanted to be an entrepreneur and an investor. And so I just set my sights out as a teenager to learn what I can and then ultimately start investing when I could. And that was when I became an adult. And that's when I was able to pull the trigger and go out and look for something. It was an end unit townhome, needed some work, wasn't distressed, but it definitely needed updating. Fortunately, my uncle was a carpenter. So I hired my uncle, but I bought this property, fixed it up. There was no internet. So I put a sign on the lawn. I printed out a bunch of applications. I believe I put an ad in the newspaper.
Old school.
Old school. And, and I didn't know what I was doing. I just jumped in and I interviewed some people and I just chose the person who I felt was the best candidate as a tenant. And so I put them in the property and and I quote unquote managed this property.
Yeah.
And that was my first rental property, like at an early age. And that's how I cut my teeth. It was just like the want, the need, the desire, it was all there. So
Yeah. I want to go back to one thing you said, because I think a lot of people think that in the beginning, when they think real estate, they think like you did originally that, hey, that means like the Ferraris and the airplanes. But then you see this guy over in the corner. It's like that guy has, 20 duplexes. And that's the millionaire next door philosophy. Like we don't understand when we're young. We think we're, like you said, chasing being rich, but it's about time freedom, right? I mean, that's really, you just didn't really understand what time freedom was. But at a young age, you're really saying like, I'd like to be free to do whatever I want, right? That's an entrepreneurial spirit.
it totally is. And the sooner you realize that, the better. But then, that's just the first step. At that point, you really need to take it to the next step. And that's either, educating yourself, which, knowledge is very powerful, and you should move away from ignorance and educate yourself and use that knowledge to apply to building a better future, investing in yourself, and then investing in assets that generate income and that grow, equity over time. That's the only way to get ahead. Because if you don't do that, you're going to fall prey and victim to inflation, and you're just going to get poorer and poorer.
Yeah, it makes sense. And I think, part of being an entrepreneur is like taking action. A lot of people want to be an entrepreneur, so they come up with all these ideas, but they get stuck in analysis paralysis because they just don't know what first step to take. If you could go back, what do you think it was about you that enabled you to just go out and take that first step at 18, try to figure out how to renovate a property and then rent it, talk to renters, just get it done? It seems like you were very passionate about like moving forward.
Yeah, well, I guess it's that was a long time ago. I guess the passion was there. So obviously, the first thing is going to be, the desire. You have to have some spark or burning flame in you to say, hey, I don't want what I have today. I want something. You have to have a vision, imagine what it is you want, and then set your sights on getting there. And you have to be an action taker. I mean, none of this is going to fall in your lap. If you're lazy, it's not going to happen. But to me, my first rule of my 10 rules of successful real estate investing is educate yourself. It's knowledge. When I do presentations, one of the first slides, it is one of my first slides. I always ask the audience, to finish the following sentence. And I put the sentence on the screen. It says, ignorance is, and then there's a blank. And I ask the audience, finish this sentence. And 99% of the audience will say, what do you think? Actually, what do you think they say?
I hope they don't say bliss, just because that's like a common quote. It's like, well, that's not going to help you.
That's exactly what they say.
Most people because it's a quote,
Yeah, I don't even know if they stop to really think about what they're saying.
Right.
Like, is it really bliss? Like that almost sounds like a horrible thing.
Yeah.
But I finished the sentence by saying that ignorance is expensive. See, you don't know what you don't know, and what you don't know is actually costing you time, money, opportunity cost. You're not getting ahead. So knowing that ignorance is expensive because of opportunity cost, you really start to realize that, and this is a big takeaway. The price of education is far cheaper than the cost of ignorance. So if you really stop to think about it, the cost of ignorance is incredibly expensive, because the price of education can be free. I mean, you listening, people listen to your podcast, people listen to my podcast, people can get information online. Books are $10 to $20. Courses can be, $100, $200, $500, whatever it is. You can educate yourself pretty inexpensively, and then you can apply that knowledge and build yourself an incredible portfolio of investments. So, to me, ignorance is really expensive.
Yeah.
And knowing that at a young age, I mean, I didn't know that definitively, but I felt it. And just knowing that at a young age, it just allowed me to move forward. But people need to realize that the first thing you should do, the best thing you could do, is invest in yourself. And that just means educating yourself, learning what you can about anything and everything you can, and then applying that knowledge. And that's not hard to do once you have a clear vision or a clear goal of knowing what it is you want to achieve. If it's one single family rental property this year, then figure out where you're going to invest to get that property. What's the cost of that property? What's my 20% down payment?
Yeah.
Now, what's my target as far as, what I need to save or accumulate in order to purchase that property, plus my closing costs. And, when you get that clear, it becomes easier. You start to see where you're going, and it becomes attainable.
Yeah. Would you agree that I think like having your finances in order for someone who wants to get into it is so important because you can stack the knowledge and then start to meet people. But if you don't even understand your own finances and then you think you're going to go get a deal, it's not going to happen.
Yeah, I think you do need to understand your finances, but that doesn't necessarily mean that you're running a budget. Like a long time ago, I started creating a budget. I was tracking my stuff into it quicken. Uh,
Yeah.
I was budgeting everything. And I got thinking, man, this is painful. It's frustrating and painful. And why do I have to track everything down to the dollar or even to the penny? It's why not focus on making more money and less focus
Yeah.
on saving, $5 here and $10 there. I mean, when you're spending $7 at Starbucks,
Yeah.
you know,
Your point is great, though. I mean, like I was thinking while you were talking that like the point to me is I want to make enough money so I don't have to worry about my budget. Doesn't mean I'm going to like go out and buy boats. It just means that I want to make sure that the amount that I'm making is far increasing what I'm going to, far over what I'm interested in spending anyway. Because I agree with that. I keep everything in my life on a spreadsheet except my finances. Because of that reason, I understand already that I put the scale in, which you can get from education and action, which you can't get from ignorance. There's no scale to ignorance. It's the scale going the wrong way.
mm-hmm. Yeah, I think budgeting is good for people who have a spending problem they don't know where their money is going and they're out of control, and they really need to put their debt under control and their spending under control. And love them or hate them, that's more of a Susie Orman and a Dave Ramsey mentality. But the reality is you can't save yourself to wealth. You'll never be able to save enough to become wealthy. You need to figure out how to grow your top line while you're managing your expenses, because if you can't do that, you'll never get ahead. All you're going to do is manage what you already have. You're just not going to get ahead.
Yeah, I agree. It goes to your Starbucks example. I mean, if you pass on the $6.50 latte every day, that's not getting you rich. You're going to have a little more money, but you're probably spending that extra $4.25 on something else. It's just that's not a builder. It is smart for people, but like you said, if it's really an issue that they're overspending, they know they're overspending. The budget's just to help them try to constrain themselves, but there's another issue going on there. Going back to your first flip, and then we'll get how you got into Turnkey and your whole career. But what did you learn by doing it all without really knowing anything on a first flip? Because I still think even with YouTube and everything available now, there's people going out there and really trying to DIY it. It's tough though, but you got it done.
Well, again, there was no internet when I got my first rental property.
I remember those days.
So what I learned was really just from reading, books and courses. And it was kind of limited at that. So part of it was just, a common sense and intuition. But I read what I could, and I had a pretty good idea of what I was getting into. I mean, there was information out there. There was an MLS.
Yeah.
You can do a bit of an analysis, and real estate agents were around, the property managers were around, although I didn't use a property manager. There was enough information out there that you could figure it out. Real estate is not that complicated. It really isn't. People overcomplicate real estate investing. It's just math, and simple math at that. If you got an understanding of a market and you have a better understanding of a neighborhood, you understand, what kind of the demographics and the tenant pool that's there and the desirability of it, you're going to do well. You'll mitigate a lot of your risk just knowing that you're in the right areas, the right neighborhoods. So I looked at that kind of stuff. Some of it's quantifiable, some of it's qualitative, some of it's quantitative, but you make the best decision you possibly can given the information that you have and that you can amass. So, and that's what I did. It's not like I had all these, demographic tools online like we have today.
Yeah.
But I just knew I wanted to do it. I just did it.
Yeah. How did you eventually start going bigger? Like what spurred you to go from doing this first, you had your first rental property. How did you grow that into what you've done today with now one of the biggest turnkey companies in the country?
The real turning point, what I'll call the next major stair step in the staircase, was in 2006. It was about a year and a half, 2 years after my last, what I'll call my corporate job, which was really me being a third co-founder in a .com business. But that was after the .com bubble burst, and VC capital dried up, and we had to wind the company down. We had 105 employees, and I was the third in, like as a co-founder partner, and I was the third last to leave. So I didn't want to ever do that again. I just didn't want to get back into, a corporate job, a desk job, or corporate America. So I took some time off, and I just kind of dabbled to fill my time with some entrepreneurship. I started a small business that was just really just to fill my time. But then in 2006, most real estate investors listening to your show will recognize or know the name Robert Allen, Robert G. Allen. He's written, dozens of books, some of them with Mark Victor Hansen. But, he's well known for nothing down real estate investing. He's got a lot of books on that topic. Great guy, by the way. So I don't know how I got on his email list, but I got an email in the summer of 2003 saying, hey, we're having this major event in Orange County, California, happened to be where I live.
Yeah.
And it's 2 days, maybe it was 3, but it was 2 days of free education on real estate and real estate investing and stuff. And I thought, well, hey, this is cool. I got the time for it. I'm interested. I've always been interested.
Yeah.
Let me go check it out. So I went there, and it was an amazing event. There was probably about 2,000 people. It was a huge event. It was at one of the major ballrooms up by in Anaheim. So anyway, I went to this 2-day event, and of course, a lot of free content, a lot of great education. It was good. It was well worth going. But of course, they're selling something there, and what they were selling were boot camps, 5 and 6 city boot camps that are in different places around the country, and that started at $15,000 for the package, and then went up to $25,000 and ultimately $35,000.
Yeah.
So it's interesting, at each of the sales breaks, people are going to the back of the room, credit card in hand, and slapping down $15K, $25K for these programs. And I had the interest and I was sold. I mean, they had one of the best speakers I've ever heard on stage, a guy named Glenn Purdy. It was riveting. So I thought, yeah, I'm going to go too. So I signed up, and I started going to these different cities at my expense. And in the process of doing that, I was A, meeting a lot of investors, and B, it kind of put me back on the path to real estate investing, but full time. And so I started buying a lot of property very quickly. It was actually the time when mortgage financing was so easy to get. You could bog a mirror, and get mortgage financing. So it allowed me the opportunity, or the ability, I should say, to acquire 84 doors in about a 9-month period.
Wow.
So, I just went all in, if you want to put it that way. So that's how I went back into real estate, but full time, and really, put the pedal to the metal. Now, I made a lot of mistakes in the process of doing that because, credit was so readily available, and I didn't know what I know today. But that, fortunately, is what laid the foundation for me to start Norada Real Estate Investments, because I was out there doing it. I was making the mistakes, but having my successes, and I was creating a system to find properties in different markets and buy them sight unseen, and have all the systems in place to do that. So now investors were coming to me saying, hey, Marco, I see what you're doing. Can you help me, or can you mentor me and coach me? And I would say, thanks, but no thanks. I don't have the time. But I see a lot of deal flow, and I'm not buying it all. So why don't I just, give it to you? And then that became, well, let me assign the contract to you. And then that became, well, let me flip this model on its head. That was the light bulb moment saying, hey, there's a business opportunity here. Let me turn this into a full service, end-to-end turnkey real estate investing company on a nationwide basis. And that's what I did. So from as far north as Detroit all the way south to Cape Coral, Florida, we were selling property as a brokerage to real estate investors in multiple markets. And, that ultimately became 25 markets, which is what we have today. So now investors get the properties, the financing, the property management, and the inspections, and everything else they could ever want. It's like a one-stop shop. But it all started because of that seminar from Robert Allen, where I was just re-exposed to a whole network of other real estate investors, all of which were trying to get educated, but less than 10% were actually pulling the trigger and investing and doing something to buy a rental property.
Yeah, I mean, you just went over some of the advantages of turnkey when you were talking about what you do. Do you think it's the all-in-one thing that's so attractive for investors at a large scale? I wouldn't say it's passive, but the amount of data that you can give someone as a turnkey provider, like you have the inspections, you have the pro forma, you have everything set up, you have the tenant, you have the property management. It's something that makes it a lot easier than somebody who just says, hey, I want to invest in Charleston, South Carolina, but I don't know anything and I don't know anybody. Is that really the lure of turnkey and why it's done so well for you?
Yeah, nothing is truly 100% passive. I mean,
I agree.
you could argue a promissory note is the most passive form of investment, and to some degree it is arguably. I mean, there's some work on the front end, but it is, a set it and forget it thing, and that's what we do through Norada Capital. But we wanted to create a turnkey experience with turnkey property, and we have a criteria, like a checklist of what defines a turnkey property, because a lot of people will have a property that's not turnkey, and the old saying, "lipstick on a pig."
Yeah.
It's really a bit of a dog of a property, and it's not truly turnkey, but they use that term, they kick it around, and it's kind of deceiving to some people. But yeah, I wanted a turnkey real estate investing experience end to end with the property. So it's not just about the property, but it's about everything else that goes along with it, that has to come along with it, including the counseling, with our investment counselors. And all that comes at no cost. Just, I'm going to throw it out there, like there's tons and tons of value at no cost to the investor. So you have everything to gain, nothing to lose. But that's what people were looking for. And that's what I created. And that's what people started to, latch onto. They just said, yeah, I could use the help and I want to invest. I don't know where, or I don't know what the next step is. So, we just made it easy for them.
Yeah, I mean, I think it eliminates the portion of somebody who maybe they live in the OC and they can't invest in the OC, so they're looking outside, but they don't know what to pick, and they don't know or have the time to do data research, to figure out which are the burgeoning towns and which are not. But as a turnkey provider, you're giving them all that information. I mean, you get so much information on the property, you really feel like I can go in on this and you're going to be okay. The costs, the management, and it's all kind of vertically integrated, so you're in kind of one spot.
Yeah, and it brings two concepts to mind, which I think are interesting for your audience to understand. One is understanding that depending on where you live, you might not be in a good market to be investing. And a lot of people are taught or indoctrinated into this 1 hour or 2 hour rule or radius of investing or where you live. Well, if you're in San Francisco or you're in Washington, D.C., or in a very expensive market, that rule goes out the window. You're not going to find anything that makes financial sense if you're in an expensive market. It's just too expensive, and the rent to price ratio is just far too low for that thing to cash flow or generate an attractive cap rate or a cash on cash return. So you have to look elsewhere, which is one of my other, rules in my 10 rules of successful real estate investing. And that is to be market agnostic. You can't be married to any one market. You have to look at the country as a country that has over 500 metropolitan statistical areas, which means that you can choose to invest in any one of those markets. You're not tethered to where you live. It doesn't have to be in your backyard. And when you open your eyes and you look at it that way, you realize, oh man, there's all kinds of places I can invest where I have better cash flow, better rates of return, and higher appreciation potential, because all markets are local. They all do different things at different times. And so you will have greater opportunities in other markets when you start comparing one to another to another. So if you become market agnostic, the world is your oyster, as they say. You realize that you can invest anywhere you want, put your money to work wherever it's going to serve you best, wherever it's going to generate the greatest returns. And that's exactly what I did. I was in Orange County, California. I was investing 2,000 miles away, doing my due diligence from 2,000 miles away. I figured out how to do that, and anybody can do it. It's not rocket science. It's just I put systems around it, so we have the vetted people to be able to do that. But once you know what you're doing, it becomes easy, and then you can be successful. One property after another.
Yeah, I like the market agnostic piece, because I think I've always said that emotional attachment to anything, including houses, real estate, is always a killer on your money later on, because you're tied to it. And some people get like that just about the town, like, hey, I only want to invest in this one town. Why? And when you do it with a turnkey provider who's in 25 different areas, then you at least the system. So you don't really have to know, Appleton, Wisconsin versus Kansas City, because you're still going in and getting that kind of all-in-one experience, which is just going to be, again, like we agreed, not passive, but a little bit more hands-off in the like demographic research and decision-making phase. It just makes it much more easy for someone to make a decision, knowing the numbers and knowing they don't have to participate in assisting right away, other than managing the manager.
Yeah, and one more thing I'll tie to that, if I may.
Yeah.
Again, another one of my rules is a lot of investors, especially in the beginning, make the mistake of looking for a property. they're looking for the right rental property or investment property, and they'll start looking on the MLS, or they'll look at what their friends are showing them, or where their friends are investing, or they get presented stuff from agents or brokers or whoever. And the problem with that is you're being too myopic. You're focused on the property, and that's fine. You'll ultimately need to do that, but you're putting too much emphasis and weight on that property. They neglect to look at one of the most important things, and that is the neighborhood that the property is in.
Yeah.
So my rule is to take a top-down approach. Start with the market. Where is the market where there's a good balance between supply and demand, there's available inventory, and most importantly, the numbers make sense. When you have all those things working together, then you can choose the markets that you should be looking at or evaluating. Then you start to drill down into areas, and then ultimately the neighborhoods. In my opinion, I think the neighborhood carries the most amount of certainty and or risk. If you can pick good neighborhoods that have stability, low crime, decent schools, high desirability from a tenant pool in that market, you've probably mitigated 70% of your risk. The neighborhood is probably the most expensive thing, because you can be in a, relatively speaking, crappy market, a metro area, but be in the best neighborhoods within that market and do well. Real estate is very forgiving that way. Over time, real estate mistakes are very forgiving. So choose your market, then choose your neighborhoods, and choose your neighborhoods carefully, and then start looking at properties. The property should be the third thing you look at, not the first thing you look at. If you're lucky to be presented a property that's a good deal in and of itself, and it happens to be in a great neighborhood, in a good market, wow. And do your due diligence and seriously consider it. But take that top-down approach like a funnel, then look at the property, and then do your due diligence, research the numbers, get the inspections done, et cetera, et cetera. And that's the proper way to go about it. And that's how I did it from 2,000 miles away in other markets. I didn't do that at first, but then I figured it out pretty quick.
Yeah, I feel like a lot of newer investors and seasoned investors make the mistake of not doing that neighborhood due diligence, because then you're not going to get the same type of appreciation. It's like when people say, well, I only want cash flow. Well, you're going to get really good cash flow in areas that are going to be low appreciation and high maintenance. So they don't really understand. You can get both, and you can especially get both when you're looking in the neighborhood portal, where maybe your cash flow starts a little bit lower, but your appreciation potential is higher. So you're trying to be a hold investor. So you're going to scale that over time. And that's why I think what we were saying is so important. If you're really focused and you understand what's coming to that area, then you're betting on that area, so you can start to focus and then try to get a couple more in there before you expand out.
Mm-hmm. Yeah, that's exactly true. And that's a good way to approach it, and also know whether you're a cash flow investor or if you're an appreciation based, like equity growth investor, because that will dictate the type of market you're focusing on. If you want maximum cap rate and cash flow, you might be looking in the Northeast or the parts of the Midwest or tertiary markets, smaller markets. But if you're growth focused, if you want that strong appreciation potential, you look at where there's high migration rates, like many areas of Florida, for example, or the the Sun Belt areas. That's where there's a lot of strong demand, a lot of new construction going on. That's where you're going to see stronger appreciation rates. I mean, it was double digit. Now it's kind of like dropped to like the high single digit, but it's still pretty strong. So you got to define what kind of investor you want to be.
Hey, it's Jonathan, just taking a brief break from this episode to talk to you about Royal Legal Solutions. I had Scott Royal Smith on episode 92 of the podcast. You can go back and check that one out after you finish this episode. And he opened my eyes to how much protection I was losing every year that I didn't activate, build a team, and protect my assets. You can get information about Royal Legal Solutions by using my link at bit.ly/ZenRoyal. And bit.ly is bit.ly/ZenRoyal. You'll find a lot there. You'll find a 30-minute video to watch with Scott. And I can guarantee you what you hear on the podcast is exactly what you're going to hear in that video. So give it a try. I'm down the rabbit hole right with you. Let's get back to the show. Have you stuck personally with just Turnkey, building the companies, or are you interested in other assets yourself, over the time frame of that you've been investing?
You mean like my personal investing?
Yeah, yeah.
Oh, I've been involved in pretty much every asset class. I mean, real estate where I started, but I've invested in stocks. I've invested in small businesses. I've invested in gold and silver, crypto, cannabis, business ventures of all kinds. I've been doing a lot over the last 3+ years on theatrical productions. So I'm a
Right.
co-producer in over 10 Broadway productions right now, which is pretty fun and exciting. It's high
Yeah.
risk, but it's also, kind of cool.
But that's why 10 of them, it's like, one has to go well. That's kind of like crypto too. You can get a few and see, but that's important for diversification. That's why I asked, because I feel like real estate in general is pretty diversified. You can get a lot of different assets, but I've always been someone interested in stocks and other things as well, businesses, because I think it brings a balance to what you do. If you're just always like, there's something to be said for being one note and just being the best at that. I have no problems with that at all. But to me, I get a little bored. I like to flip, and then I'd like to look at some other things, and I like other things that are alternative. In terms of real estate, what's your preferred asset for just you being a buyer?
What's my preferred asset?
Yeah.
Like within the real estate asset class? Single family homes. I mean, a lot of people, lean towards larger units or small and medium sized apartment buildings. That's all well and fine. That's great for scale.
Yeah.
And, obviously you're going to be syndicating that and creating a group investment if you're going to go, to 50 to 500 doors. And that's great. There's nothing wrong with that. You become a general partner, you take on other responsibilities, and now you're having to deal with a bunch of investors, and, it's just a different animal. But for me, I've always loved single family homes and duplexes, but primarily single family homes. Everybody's been in one. Everybody understands it. It's pretty straightforward to understand how to get in there and fix something if something needs to be fixed. People like the privacy. You've got your own 4 walls of privacy. You're not sharing it with anybody else. Even if you're a tenant, there's this sense of pride of ownership. You have your own front yard or backyard. I think you get, anecdotally speaking, the highest quality tenants in single family homes. You probably stand to see the best appreciation in single family homes, although like a rising ocean will lift all boats.
To lift the single families higher.
I think they tend to withstand market fluctuations better. I just think all around it's just a better choice. So, but I'm also a little subjective and biased on that, because that's what I've spent most of my time on, are single family homes.
Yeah, I mean, same with me. I like the potential appreciation, and I also agree. I think it gives you your best tenant scent, because I think that tenants in single family homes, as you said before, they're treating it like their home. So if you're a good landlord, you could provide somebody a really nice home, and you can have a very solid tenant for multiple years without having to worry. Just maybe someone who either can't buy a home because they're 1099, they can't qualify, or they may move at some point. But tenancies are really important. Over the years, working in obviously getting these things set up in all these different markets, how important have you found the property management end of it in terms of choosing tenants for all of the people who are buying in on Turnkey? Is because we both know things can go very wrong if you choose the wrong tenant, and people are looking for an avoidance of a headache.
Yeah, no, property management is very important. I've said for the longest time that if you're not going to self-manage your property, you should always have what I refer to as a full-service professional property management company. So what does that mean? That means that you're not dealing with like a single real estate agent or a one-man show or a very small mom and pop. Although that's okay. You really want a firm that covers everything end to end. They have a staff to handle the maintenance side of things,
repairs,
side of things. You want them to be proactive and on top of it all. You don't want them to always be reactive and not, keep an eye on the property and do, an inspection once a year or maybe even twice a year that communicates with you. Communication is very important. There's a lot of factors that go into it. but you want a company that is managing your asset, not just your property. They have to understand that this is your investment. It's an asset. It's not just a property, and you're dealing with a customer, and that's your tenant, and that tenant needs to be taken care of as if they are a customer, not just a person, that you're expecting a monthly rent from every month. That part is true, but you're running a business. If you're a real estate investor, your product is the space in the property that you're renting out. So it has to be treated that way.
Yeah, I mean, the tenants are the caretakers of your asset. And I've always found that whenever I see people like in a forum complaining about a tenant, I can always diagnose what the real problem is. You could just ask a couple of questions like, are you doing the repairs? Do you really even know the tenant? They're like, no, somebody else chose them for me. The house needs a lot of work. It's like, well, why would the tenant be happy? They're not getting a good experience. And so why would they treat your asset like a home if you're not even, I always say that about the upkeep of homes. That's why turnkey is interesting as a corollary, because they're already set up and they look nice. But I've had a lot of landlords who are like, well, the inside's great and the outside's bad. And I'm like, but why would someone be excited as a tenant to come home when the exterior of whatever it is, apartment or the house, looks bad? Like the landlord's not doing the upkeep on the outside, but they think, hey, well, the inside's fine. It doesn't feel good to come home, so it doesn't feel like home.
Yeah, exactly. Yeah, you may not live there yourself. It might be not your standards or your taste, but you should still create the best possible living environment for someone else who is accustomed to that property type and that neighborhood and whatever else it may be. You want to create the best living experience possible for that tenant base.
Yeah. With your experience over the years, if you had a brand new investor come to you now, which of course we have several listeners who are going to be brand new, what's the first place that you would tell them to start in today? Like you and I both started a while ago, but now it's different. There's a lot more technology available to people. I always worry that people are spending too much time in technology and not enough time actually looking at houses and understanding. What would be like one piece of advice that you would give someone trying to get in right now?
When you say get in, you mean just getting started in real estate?
Yeah, to eventually so say they have money to invest, but they don't know what to invest in, and assume they are capable of taking the first step.
Well, where they should start, if that's what you're asking me, is what we were talking about before, and that's the whole concept of ignorance being expensive.
Yeah.
I mean, really, the starting point is to educate yourself as much as you can about real estate in general, real estate investing, and that doesn't mean you have to become a real estate agent or an expert in any one thing, like really deep. Just have a good understanding about different concepts and investing in general, so you can have an intelligent conversation with somebody or your team when you build your team to be real estate investing in real estate, and then start figuring out with your team where you should be investing. Is it just a matter of baby steps? Part of it's the education, but part of it is just defining what is it you're looking for. What is it you want when you want to invest in real estate? Is it a single family home? And is it in the Midwest? What kind of market? What can I afford? And that doesn't mean investing in the cheapest property possible. That's not the better deal. In fact, that's actually making a mistake, because you have to downgrade yourself to a C or D class neighborhood when you really should be focused on B plus neighborhoods. But it's just being clear on what you want, educating yourself, building the right team around you, people you can talk to, learn from, ask questions, and allow them to help you and educate you. And then once you've taken that step, you just ultimately do what I said before: top down approach. Decide on the market, look for the right neighborhoods in that market, and then start looking for properties within that market with your team. If that's a real estate agent, great. If it's a property management company, great. If it's a turnkey property provider like us, great. But you just have to keep moving in those baby steps forward, and always keep moving forward, not back. You'll ultimately find what you're looking for, then pull the trigger, put it under contract, do your inspections, get your financing going, or continue with your financing. All that stuff.
Yeah, you said something though before that I think is helpful as well. You said when you paid the $15,000 with your credit card, and then you started going to all these other cities to do the research, you also met a lot of other investors. How important has building relationships with other investors, especially in the beginning, been to you, just in terms of a learning? Because I've always said, like, it's very hard to just go on books until you see somebody like we were saying. You brought up the guy in the corner owns 20 duplexes that your mom showed. Until you see somebody, you're like, wow, that guy has 20 duplexes, and you're like, oh, I can do this. And I think that's a little bit of what some people are missing, because everything's online. But once you really connect with other investors and realize like people just like us are doing it every single day, and they don't have to post about it on social media, it becomes a little bit more realistic and like capable to get there. Have you found that over your time in real estate?
Yeah, the community part is important. Like networking is important. The reason I've been a member of masterminds for years is because I want to be around other like-minded people to learn with them and from them, and cross-pollinate and share ideas. So getting out there, meeting other people, going to events, networking, joining masterminds, all that stuff is very important. Especially in the beginning, it was for me, and it is for most people. Is the people you talk to and the questions you ask and the things you learn from other people, and vice versa, it will help accelerate your success and your path to get to where you want to get to. If you try and do it on your own, it's going to be difficult. It'll be very difficult and slow.
Yeah. Well, so tell us a little bit about Norada Capital, because you started with real estate and now you're into the capital game. So what do you guys do there? And then why did you get into that part of the business as well?
Well, that's kind of a long story. Norada Capital is what I just look at as my private equity firm, but it's from the outside looking in, it's an investment fund. So investors can invest if you're an accredited investor, you can invest and earn 12 or 15% interest fixed per year, and it's paid monthly. So it's pretty good yield at 15% a year.
Yeah.
On a promissory note that you could lock into, the term you want, like a 3-year, 4-year, 5-year note, whatever. So it's great for investors, especially if they're using a self-directed retirement account. And that's the capital that we bring in, is from outside investors to arbitrage and build and scale the business ventures that we're focused on. We're building 2 massive educational masterminds, one for real estate, one for just money in general. We call it Money Is. We have about 8 or 9 e-commerce businesses in there that are all name brand businesses. So we're growing and scaling those. And then the third category of what we use that capital for, which is a very small percentage, is the Broadway productions, the theatrical productions. That's a very small percentage, like less than 5%. But the mastermind businesses, the educational masterminds, and the e-com businesses are really what we're building, growing, and scaling, as part of our fund. And we've been doing this for 4 years. It's going well, and our goal is to build $3 billion plus businesses within our firm. So we're on track to do that. It's a 3 to 4 year runway, but we'll get there.
Yeah. Excellent. And so, Marco, where is the best place for people to get in touch with you? I know your hub site is marcosantarelli.com. Is that the best place, or should it be Norada Real Estate or Norada Capital, depending on what people are interested in?
Any of those 3 are fine. My personal website at marcosantarelli.com actually links to all those other websites. So it's kind of a good place to go. And I'm pretty active on Instagram, which is my name with my middle initial. So it's Marco G, like George, Marco G Santarelli. That's my Instagram handle. I'm just starting to give those out more and more,
it's easier.
Yeah, because it's kind of like the central hub, because I could talk about real estate, I could talk about private equity, I could talk about all these different things. And so why not the hub of a wheel and just send people to Norada Real Estate, Norada Capital, Marco Santarelli, whatever it is. So
I agree.
Yeah.
Yeah. All right. Well, I really appreciate the time. It's nice to talk to someone with a long history like myself. Thanks so much for coming on the show.
Jonathan, it's been a pleasure. Thank you so much.
All right. That was Marco Santarelli. I'm Jonathan Green. We'll see you next episode. Wait, you have reached the end of the show. This is the part where you're going to get ready to check out, but I've actually changed this part. For over 120 episodes, you heard the same thing. Well, now I've changed it. I've thought about doing intros to the next episode, but I'm going to hold off on that for now. These are my pitches at the end. I've got nothing to sell you at all, but I do want to remind you that it really would help us if you support the podcast in the right way. All that means is subscribing to the podcast so you get it on Monday and Thursday, writing us a 5-star review if you believe that we deserve a 5-star review, sharing it with your friends, and being a participant in the Zen and the Art of Real Estate Investing community. Soon there's going to be a new website launched. Maybe when you're listening to this, it's already going to be out there. That's where we're going to have collaboration. You're going to be able to see a lot from the guest. It is coming soon. And I just want to tell you, from me to you, I don't know how I got here, over 100 episodes. I'm so appreciative of you listening to the podcast and especially sticking around to hear this part. We'll see you next episode.